but we'll just call on Bill to kick things off, and then, or do you want to go right to Nancy?
Right to Nancy.
All right, Nancy with Bergen KDV is going to present the audit for us this evening.
Okay.
All right, good evening, everyone. Thank you for meeting early to go over the results of the audit with me.
And Nancy on the keyboard, did Lynn
Yes.
already show you?
Yep.
Perfect.
Arrows, so we're in good shape.
Good, we're in good shape.
All right. So I've taken the information from those 3 booklets that Bill emailed to you and put them in a PowerPoint so that we don't have to dig through all of those pages. If there's something in those that you want to touch on or you want to discuss in further detail, just, raise your hand and we can certainly do that. So to start out, I want to talk about the communications that we issue as part of the audit. And the most important communication is going to be the independent auditor's report, and that is in the financial statements. It discusses management's responsibility for those financial statements. It discusses our responsibility in quite a bit of detail, talks about the reasonable assurance that we're providing on the financial statements, and it houses the opinion paragraph, which is the most important paragraph in the whole document as far as the audit goes. And what we're issuing is an unmodified opinion, which is a clean opinion, if you will, and it is the best that we as your auditors can offer. It is an indication that everything is fairly stated in all material respects based on the results of our audit. We have a couple other letters that we issue related to compliance. So first of all, we have requirement to audit in accordance with government auditing standards. And these standards require that we look closer at internal control and also compliance with laws, regulations, contracts, grants, other matters. Related to the internal control work, we do have one significant deficiency, and it is not new for the city of Fergus Falls, and it is not uncommon for a city of this size, and that is the lack of segregation of accounting duties due to the limited number of people that you have in your finance department. And then as far as compliance goes, we did not note any instances of non-compliance related to those standards. The report on Minnesota legal compliance is the next official letter and the last official letter, and that comes to us from the Office of the State Auditor of Minnesota. They're very specific in the statutes that they request that we look at in relation to accounting matters and as part of our audit. And based on the work that we did related to those statutes, we had no findings that we noted there as well. So clean compliance reports in both instances there. Then we have a separate document that we issued titled the Communications Letter. And there's financial analysis that we'll go over tonight included in that letter. There are several pages titled Required Communication. Those are things that our audit standards require that we put in writing to you all as the governing body for the city. And that would be our tool if we had anything significant that we uncovered, anything unusual, any difficulties or disagreements with management, those types of things. And I'm happy to report that nothing strays from our standard language in those pages. So that is good news. And then in the back of that document, you'll find several pages titled Emerging Issues. Those are new audit standards, not audit accounting standards that are coming up. So if you need some light reading, that's there for you. If you have questions, we certainly can talk about those, but I didn't intend to go over those in detail tonight. So moving then to the financial information, starting with the general funds, and since that is your largest operating fund for the city of Fergus Falls. And what we have on the first slide here is the fund balance for the last 5 years. And in most of these charts, you will see a 5-year perspective, but for tonight's discussion, we're really going to key in on differences between 21 and 22. So you can see that your fund balance did decrease about 1.5 million for the year to a total of just under 8.7 at the end of the year. And the components are broken out there in the chart. So your unassigned number did decrease, just related to operations. The assignment up a little bit, and that had to do with some of the capital funds that are carried over year to year with the budget. The restricted amount decreased, and that was primarily related to the ice arena restriction and the chiller system that was purchased. So that's something that will be a reoccurring theme throughout the discussion of the general fund when we talk about expenditures. And then non-spendable, those are amounts that are already paid for next year's expenditures, and that amount did decrease just a bit but didn't change significantly. So when we look at that unassigned number, the 5.878 million, you do have a policy that outlines that that number be 35 to 40% of your operating capital budget for next year, so the subsequent year's operating capital budget. And based on the calculation for that number, it's at 42.9%. So really close to that fund balance policy and not below, which is good news. Taking a look then at activity, taking the revenues and expenditures at a high level here, you can see that expenditures did exceed revenues this year, and that was about $2.3 million. But the overall operations of the fund, the decrease was less because of some transfer activity and other financing sources uses that are below the line. When we look at revenues, revenues were up about 2.4%, expenditures up about 11.1%, driving that excess expenditure for the year. We look at the details of those numbers on the next several slides, starting with the revenues. And again, we have a 5-year perspective here with all of the components where your sources of revenues are coming from. And if we look at the changes, again, up 2.4% overall. Taxes were up about 6.8% or $354,000 related to an increase in the levy for 2022. Licenses and permits up about $108,000, which actually is almost 48% with increased building permit activity during 2022. The intergovernmental category was up about 6.9 or $333,000 related to those ARPA funds that you received, the Federal American Rescue Recovery Plan funds. Charges for services, that was up as well, about $123,000 or 12.2%, and that is related to the rental of that ice chiller that was purchased from those restricted funds. So you had some increased revenues as well as increased costs. And then the miscellaneous category was down significantly, about $618,000. And that had to do with an accounting entry that happens at the end of the year. City governments are required to adjust all investments to the market value at December 31st. So there is an unrealized loss that occurred at the end of the year just based on where the market is at and where interest rates are at. So that's not something that's realized. It's just an accounting entry at year end. So as you hold those investments to maturity, they'll work themselves back up to their par value, and you'll realize those amounts. Yes.
So as just a side note with that, Nancy's referencing that we mark them down at the end of the year. That's for the audit. We actually do adjust those monthly. So we watch that every month, and then quarterly we meet with our investment advisors. So, and we had told you this before when we came in with our year-end report as well. And we have started to see that swing back some this year, thankfully. Yep. So.
Yeah, and this is a discussion I've had with all the council meetings that I've been to this year, that market value adjustment, decreasing the miscellaneous revenues and investment income. When we take a look at those revenues and compare them to the budget, revenues were actually over budget about 3.6%. And that came across about 3 categories. First of all, licenses and permits. With those increased building permit amounts, those were not necessarily anticipated in the budget. That's a common area to budget conservatively because it's hard to anticipate how many building projects are going to happen within the city. The intergovernmental was over budget. Part of that is conservative budgeting related to those MSA funds that you receive from the state, and part of that has to do with the ARPA funds not being included in the budget to the extent that they were spent. And then charges for services, and again, that has to do with that arena chiller. So that those amounts, the rental of that, not included in the budget. Offsetting all of those over budget amounts, you do have the significant under budget in the miscellaneous category, again, related to that unrealized loss on investments. One last slide to take a look at your revenues, and this is in a pie chart format, just to highlight where your money is coming from and take a look at it year over year. When we look at the percentages of the sources of the city's revenue, they're very consistent from 21 to 22, shifting not more than 1% one way or the other. So property taxes and intergovernmental revenues are where most of your money is coming from to support the operations of the general fund, making up 87% in 22 and 85% in 21. Switching gears then to look at the expenditures for the general fund, these increased 11.1% as we discussed on that high-level chart, and a lot of categories contributing to that increase. First of all, the general government was up related to wages and benefits. You have IT director on phased retirement. You implemented Office 365, and then the Flex Benefit Fund, which had been a separate custodial fund, has now been rolled into the general fund, increasing those benefit costs in that area. Public safety was up about $503,000, primarily related to wages and benefits, with some significant amounts for retirements, and then also health insurance rates up in that area. Streets and highways up $652,000, kind of across a lot of categories. There were some project costs in there, bituminous overlays, some seal coating. Sand and gravel costs were up, and we've seen that across the board as well with inflation. I mean, we're all experiencing that. It happens here at the city too with the things that you purchase. And then snow removal was up for the year.
One side note with that.
Yep.
The prior year, I believe, we didn't do as much for seal coats and overlays, so we carried those forwards, but those budgets forward and basically doubled than what we were doing in this year. So, which I guess we would see it was down the year before as well too. So that would make sense.
Yep. And then if you move over a few columns to the culture and recreation, that was up 312,000. Again, we've got that chiller for the ice arena coming into play there, and then also wages and benefits in that category. And then the one area that did decrease was capital outlay, which is the far right there. 2021 had a purchase of a fire truck, so that was a significant year and the highest year that you had in your capital outlay. And when we take those numbers and compare them to the budget, expenditures were actually under budget about 7.6% or almost 1.2 million. The biggest driver in that is going to be on that far right-hand side, the capital outlay. So the city budgets amounts in anticipation of projects in the future as a savings tool. So that's consistent, that number is always under the budget.
Mm-hmm.
And then some other categories that were under budget, general government was under. You had a comprehensive plan that did not happen in 2022 that was part of the budget, and then some benefits that went, the budget for those that went unused. And then streets and highways under budget related to the carryover of some of those funds like Bill was talking about. So the carryover happened, so the budget happened previously, it was in the fund balance, and those amounts were used. And then utilities were actually under budget in this area for street lighting and electric. The most significant over budget was in culture and recreation, and once again, the chiller is part of that, not included in the budget.
So just to summarize that chiller a little bit, if you remember, we rented a temporary chiller, spent the money over here, and all the user groups paid in to pay for that. So we raised both revenue and expenses equally for that, and that's why you're hearing that. But
Yeah, almost-
that was funded through the user
every-
groups.
Right, almost every slide has that as an explanation for some change or an over/under budget, but it all had to do with that. So the last expenditure chart that we have takes again a look at expenditures in a pie chart format, and here you will see very consistent spending. And as an auditor, that shows me that you have sound budgeting practices and planning. So you're able to avoid those fluctuations, significant fluctuations by category. So again, very little change when you look at 21 compared to 22. So a few percentages here and there. Any questions on the general fund before I move on to the enterprise funds? All right, and we'll take a look at the enterprise fund, starting with the waste management fund. Revenues up 9%, expenses up 3.5%, and a couple of things going into that expense increase. First of all, that inflation that I mentioned earlier, supply costs, you'll see that consistently through the enterprise funds with increased costs. You'll also see an increase related to the pension. So annually, PERA divvies out the pension expense to all participating entities across the state of Minnesota. And 22 saw a significant increase in the unfunded liability. So, we're all experiencing changes in investment income and just other estimates that are used. So that drove up the expense for the year. And since the enterprise funds are on that full accrual basis, you see the increase in the actual expense. So a common theme there along with inflation. When we look at the increase in revenues in this fund, it had to do with increased tipping fees and recycling fees, just kind of across the board. So more activity. Sewage disposal is next. Revenues and expenses in this fund both increased by 2.8%. So very minimal change from 21 to 22 and a consistent operating income in this fund. So all appears to be working appropriately. And we have the water department fund. This fund actually saw a very small decrease in your revenues, about 1.1%, so very flat. But you do have the increase in expenses, primarily pension, again, for this fund. So significant amounts for all of the funds related to that. And then we have stormwater, which is the last of your utility funds. So stable revenues in this fund changed by 0.2%. So almost exactly the same as 21. Expenses were up. This one had the pension, so you had wage benefit increases, and then also some maintenance projects that happened that were a little bit unusual. So you see a more significant change in the expenses from 21 to 22. And then we have your liquor store, which is the last enterprise fund, and I have several charts that take a look at this. So we saw the significant increase in 2020. It has fallen back a little bit, but it seems to kind of be leveling out. So sales down about 1%, but cost of sales down by 1.9%. So the gross profit increased again for 22. And we do have a separate chart that looks at that. If you look at the operating expenses, which is going to be that tan, so we're going 3 lines over, up about 13.4%, primarily related to the change in the pension liability. The operating income, pretty stable for the last 3 years, just over $1 million, and you were able to transfer $675,000 to other funds. Most of that went to the general fund to help maintain the levy levels. So that is good news for taxpayers. Then we have the gross profit, and you can see that it has increased each of the last 4 years. So the chart is consistently going up. That's not necessarily what we see everywhere. And if you look back to 2021, we can compare that to state averages. State average for off-sale only for outstate Minnesota was 26.2%. In 2021, City of Fergus Falls was at 31.3%. So significantly above where your average liquor stores in outstate Minnesota are at. And then it increased just a little bit again for 22. And then we have the liquor store comparison from one store to the other. So much more activity going on at the West store, but when you look at gross profit percentages, 31.7 at the West and 32.6 at the East store. So still both of those very high level of gross profit coming in. We have some charts to take a look at your levy, your tax capacity rates, starting with that rate, and you can see the consistency that you've had here over the last 5 years, a little bit of an increase in 22 with the increase in the levy, and then the rest of the story is on the following slide with that certified levy and the net taxable tax capacity. So you can see that the levy was up after 2 years of holding steady, and your tax capacity has consistently increased each of the years that we're looking at. So overall market value growth in the city, allowing for an increase in the levy without a significant increase in that rate. And then I have one last slide that makes an attempt at looking at your government-wide financial statements, very high level. So this represents net position for your governmental activities. So it's your general fund, your special revenue funds, capital project funds, debt service funds, all of those rolled together, adjusted to a full accruals perspective. So all of your capital assets are considered here and all of the long-term debt. So when we look at this, overall, net position was down by about 1.1 million. A lot of that has to do with that pension activity. So that hits government-wide statements at a much more significant level than even the enterprise funds. So that's the biggest driver in that change, along with that adjustment to fair value for your investments. Those two things are really the drivers of the decrease in the net position. When we look at the categories, the top category is your unrestricted. That's where you saw the decrease. The second category is the restricted amount, and that increased based on a change related to GASB 87, which we implemented in 2022. So it had to do with that Lakes Country Service Co-op building. In the past, it was recognized differently. Now it's a receivable and it hits the net position. So that increases the restricted amount because that is set aside specifically. And then the bottom category, which is the most significant, is your net investment in capital assets. So that's all of your land, buildings, equipment, infrastructure, less any debt that was issued to acquire or construct those assets. And that increased. So that means that you're continuing to invest in those long-term assets, and the depreciation, which is estimating the useful life of those assets, is less than you're paying off in debt. So if you look at a home mortgage and you liken this number to that, it means that your house will still have value when all of the debt is paid. So that's the trend that you want to see in that category. And that is what I have to present. If anyone wants to look at any more detail, I'm fine with that. If you have questions, I'll take those as well.
I would just say thank you to our excellent finance staff for another successful audit.
Thank
You're
you.
here.
We appreciate your work.
Thank you.
It's kind of nice having the same auditing firm too, year after year, because they work so well together. They each know what's wanted and what's needed, and it has worked out quite well.
We always try to be prepared, and Nancy always sends new people that we never know before, so that's good to keeps it
Yeah.
fresh too, so.
Yeah, we have new people every year, and everyone fights to be on the City of Fergus Falls because they are very well prepared, and that makes our job easier. Part of the audit too, though, we have to have an element of unpredictability. So we do have things that we look at that are a surprise for Bill every year. So
That's
gotta
good,
keep
gotta
it a little
keep us
bit,
on
you
our
know.
toes.
Yep, yep.
And Bill's always ready, so.
Yes, yes.
I better never screw that up.
You got that right.
That's right.
Yeah, yeah, that makes our job easier, like I said, so always very well prepared. And that comprehensive financial statement is large, and that's a lot of work to put that together, so appreciate all the work that goes into that as well.
We start on this whole process in January, and we wrap it up tonight, and we report to the state by June 30th. And as you well know, we've switched gears to the budget now as well, too. So it's the two things we have in our life, audit and budget. Someday we'll talk about current year with you, too. I need to give you some updates, just the run-of-the-mill progress that.
All right. Well, thank you all for listening to me ramble on about numbers.
Thank you.
I appreciate it.
Thank you.
Yep.
Thank you very
Thank
much.
you.
Nancy.